Want to introduce you to Ylan Moy. She is a staff writer with the Washington Post. She covers finances, particularly consumers and the economy, and she's here today to talk with us about debt settlement companies and some of the new rules that those companies are facing. First of all, Ms. Moy, what are debt settlement companies?
Yeah, debt settlement companies are a very particular part of the debt relief industry. And what they promise to do is to actually reduce the amount of debt that you owe to your creditors. A lot of other firms and nonprofits offer to reduce your interest rate or reduce the amount of payments. They actually promise to reduce the amount of debt that you owe. And that has come under a lot of scrutiny in recent months.
Are these for-profits or not-for-profits or both?
They tend to be for-profit companies. Some of the companies that are involved in this type of debt relief actually provide other services as well. But debt settlement is a for-profit business, and that's what's caught the attention of many regulators.
And if you've ever watched TV or listened to the radio, you've seen one of these.
This is a special announcement. If you have credit card debt, please listen.
A program has been introduced that could reduce your debt, decrease the amount you owe, and allow you to make only one low payment each month. If you need relief from credit card debt, you may qualify for an assistance program that can have you debt-free. Reducing America's credit card debt is vital for our economy. Now you have a choice. We offer the successful alternative to bankruptcy, credit counseling, or taking on new loans. Thousands of Americans have qualified for this program, saving over $100 million to date. Call for a free evaluation now. It's confidential and just takes a few minutes to see if you could join the program, but it has a limited enrollment. Call for an evaluation now and get started towards becoming debt-free. Certified specialists are available now who understand your situation. Call for a free consultation. Get relief and become debt-free.
How big a business is this?
It is a very big business, at least it was before some new regulations took effect. The companies estimate that they've settled anywhere between about $2 billion of consumer debt. The average consumer that comes to them has about $30,000 in credit card debt, and there are roughly about 1,000 companies that handle this kind of problem.
So if you call one of these companies, and do they all do the same thing basically?
They do. The way that it works is you call a company and you say, I'm saddled with credit card debt. And what they promise to do is to reduce that amount of debt that you owe to your creditors. And the way that they do that is they typically charge you a sign-up fee to enroll into the program. They also charge you a portion of your total debt that's owed. So somewhere between 20% of the amount of debt that you owe, they will take as service fees. A lot of times,
on top of the debt?
On top of the debt. A lot of times, these service fees are taken even before one debt has been settled. So again, that's one of the issues that regulators have been looking at with these companies.
So what's the advantage to consumers to going into these groups?
Yeah. A lot of times these consumers are really stuck between a rock and a hard place. There were some changes to the bankruptcy law about 5 years ago that really made it tough for people who were under a crushing amount of debt to file for bankruptcy. Maybe they can't afford it, maybe they don't qualify anymore. And so they were really looking for another avenue to take care of their personal finances. And that's when this type of industry began to blossom. So for the consumer, they're looking at it as a possible way out. Maybe I have to pay somebody 20% of my debt, but if I can negotiate to get 50% of the debt that I owe reduced, then it's a good deal for me at the end of the day.
How many of these debt settlement companies are sponsored by the credit card companies?
They're typically independent of the credit card companies.
Independently financed?
Independently financed, independently run. There were some issues a few years ago with the relationship between credit counseling firms and credit card companies, but this is a different animal entirely. These are businesses that are looking to do this on their own and in some cases, according to regulators, taking advantage of consumers.
What are some of the new rules that just took effect this week?
Right, so this week, the FTC has said that debt settlement companies must now let you know how much the entire program is expected to cost, and they have to give you a good idea of how long it's going to take to go through this program. Sometimes they promise you can do this in as little as 3 years, but the reality is it can stretch out for much longer than that. So they have to be more transparent in their practices. Starting next month, they're going to begin banning advance fees in the industry, and that's something that's very controversial that the industry says could mean the end for many companies.
And that basically, how do the companies make their money then?
Well, that's
if they're not charging a fee.
exactly. That's the argument of the industry. They say that actually taking on a lot of these customers with $30,000 in credit card debt, typically have very broken credit histories, is very difficult and very expensive for them. It can cost up to $1,000 for them just to get somebody to sign up and to sort of handhold that person through the process. So they're saying this is very expensive and that they need the advance fees to survive. That's a good question. What will happen once those advance fees are banned? We may see some companies go out of business. There are a few that say we can still continue to operate and maybe rely on some other types of revenue streams and services in order to make up the difference.
How many companies, debt settlement companies, are there in the U.S.? How many clients are they serving?
Yeah, the number of clients is difficult to say because some people sort of fall in and out of the program, but the industry groups estimate there are about 1,000 companies that are operating in this arena, and they've settled roughly $2 billion worth of consumer debts.
Well, if there's 1,000 companies operating in this arena, there must be a lot of money to be made.
Well, that's one thing that they're hoping to do, and that's another reason why regulators really began looking at them. There were some companies that were operating as legitimate firms, but this is an arena that really is sort of rife for fraud. And there are several cases that have been brought against debt settlement companies. The FTC has brought 7 against them, and this is one area they wanted to crack down on.
We are talking about the debt settlement companies and new rules that go into effect this week. And Ylan Mui is our guest. She is with the Washington Post. 202 is the area code. 737-0002 for Democrats, 737-0001 for Republicans, and 628-0205 for Independents. Plus, we've set aside our 4th line this morning. If you have been or are a debt settlement client, we would like to hear your story. 202-628-0184 is the number for you to call. We're going to begin with a Democrat in Houston, Texas. Go ahead, Kenneth, you're on the air.
Yes, good morning. How you doing?
Good morning.
Yes, I want to know about the reverse mortgage. It's, you know, for the elderly people when they go and they get the mortgage. Are those companies government programs or are they private programs?
Well, that's hard to say without knowing a little bit more information about about the situation. I will say that one of the issues that regulators have been trying to crack down on is this idea that some companies are trying to align themselves with the government bailout programs and trying to sort of persuade consumers that they're more legitimate and they offer good services because they're somehow aligned with these government subsidies and government stimulus packages. So that's something to be very, very careful about. In fact, for the debt settlement industry, that is one area in which the FTC and the GAO has dinged them for, is sort of insinuating that they're involved with government programs when they're really not. So it's something that I would be very careful about.
And these debt settlement companies are not government programs,
They
correct?
are not government programs. There was an investigative report by the GAO that came out earlier this year that found some of them sort of claimed that they were a part of government programs, even maybe had some federal seals on their websites, but actually this is not anything that's funded by the federal government at all.
Next call on debt settlement programs comes from, let's see, we've got Weatherford, Texas. Andre, go ahead.
Yeah, how y'all doing this morning? I think Miss Mui.
You got it.
I think what you failed to tell the callers is some of these debt settlement companies, you have to have over $10,000 in debt before they even take you on as a client. And then they fail to tell you that, well, I don't want to give anybody any publicity, so I won't say the company's name that I talked to, but you can call your creditors yourself, and you can negotiate. I owed $140,000 in medical expenses. I negotiated myself 6 cents on the dollar. Mm-hmm. And they stopped my interest. They stopped the interest, and I'm still paying on it now. But a lot of these companies won't accept you because they won't make any profit unless you got $10,000 worth of debt or more.
Right. That is a very good point. These sorts of programs are designed for people with excessive amounts of debt. So this is not something, you know, if you have $3,000, $4,000 in credit card debt, they're designed for people who are in extreme situations. The other point that the caller made is also very good. You can do this yourself. A lot of times, you know, you can pick up the phone, call your credit card company, and tell them that you're in a tough situation, and you may be able to work out a deal. what the companies will say, what the industry will say is that a lot of people who are in this situation, they don't have that capacity, they don't have that knowledge for how to negotiate and how to handle their finances. And so that's where these companies are stepping in to help them out.
Joining us now on the phone is David Leuthold. He is the Executive Director of the Association of Settlement Companies. Mr. Leuthold, these new regulations that we've been talking about that are going into effect, what's your view of these?
Well, we recognize the need for a good deal of the regulations. In fact, our association task has required the types of disclosures and standards that the FTC is recommending. The one aspect that we really don't agree with is that what's called the advance fee ban, which was mentioned a little bit earlier, where we can't collect any fees until we settle a debt. And of course, we can't settle the debt for a consumer until they have enough money saved up so that we can actually negotiate with the creditor and get that money over to the creditor. So it puts us in a position where we're providing services month after month after month for consumers, but not receiving any payment for it.
Elon Moy, do you have any questions for David Leuthold of the Association of Settlement Companies?
Right. Well, what I would say is that there are some companies that are operating in the space that actually do not operate through advance fees. They operate through receiving a portion of the amount of debt that has been settled at the end, so they're receiving their money on the back end. So I guess I would ask, how do you feel about these companies, and can the industry survive under that kind of model?
Yeah, there have been a few companies that say they operate under that model. But frankly, everyone I know of that says that is only providing that type of fee program to a limited number of clients. I know of no company in the country that has started from scratch and actually been on that type of fee model successfully from the very beginning. Most of these companies that have been providing some sort of fee to themselves based on how much they save a client have also been charging a monthly fee along the way, which is one thing that we would really love to be allowed to be able to do. But again, the companies I know of that are now operating on that basis are only doing so on a partial basis, and of course we're all going to have to do that, starting the end of October. So it's going to be really interesting to see how many companies are able to effectively manage that process effectively, profitably. Already we've seen a good number of companies that have decided and realized they can't afford to continue on that basis and have gone out of business.
Mr. Leuthold, what about the rule that you tell customers up front, this is what it's going to cost? Do you think that's only fair?
Oh, totally. And in fact, that's one of the reasons that I helped co-found TASC back in 2005, is we realized that there was a need for standards for companies operating in the business. And right from the very beginning, we've required that exact disclosure to be made to every single client that's been signing up into one of our programs.
So, and finally, what's the advantage to going to a company like one of your debt settlement companies rather than, as Elon Moy said, calling the credit card companies yourself?
Well, some people may be able to do it on their own, and some certainly can, maybe with one creditor or two. Most of the people coming under our program have 6 or 7 creditors. And in fact, even the NCLC, the National Consumer Law Center, in a study they did several years ago, looked at the question as, can a consumer actually settle the debts themselves? And what they found is they can't. They did find that some consumers would have a creditor would say, okay, I'll settle your $5,000 debt for $3,000, but we want $1,500 today and $1,500 in 30 days. So what they found was the repayment terms really were pretty impractical.
Now, does your group, do these companies sell to the credit card companies? Okay, do they sell them in bulk like mortgages are sold?
No. Most of the settlements we make with credit card companies are on a individual one-by-one basis. There are some companies we deal with where we're able to maybe deal with, maybe 100 accounts at a time, but even those accounts have to then be handled each on an individual basis by the settlement company once the credit card company agrees to the final settlement amount.
And are any of your companies sponsored by the credit card companies?
No, not at all.
All
In fact,
private?
we're the only true independent industry that just represents the consumer 100%. We're funded totally by the fees that the consumer pays to us.
David Leuthold of the Association of Settlement Companies, thank you for being on the phone with us.
Thank you.
Next call for Elon Moy comes from Philadelphia. Go ahead, Philadelphia. Edward.
Yes, sir. Good morning. I don't know how these credit card companies really can survive. The country's full of deadbeats, liars, and drug addicts, and no matter what agreement you make with them, they're not going to pay anyhow. That's what I see, and but not only that, they'll brag about beating the credit card companies.
That has been actually an issue for the credit card companies over the past few years. The charge-off rates, which is sort of the rates of people who are no longer going to be paying their debts, have increased dramatically. In fact, at some point they were up to 10 and even 12%. And that has cost the credit card companies a lot of money, and it's something they're not very happy about. But it's also forced them to sort of restrict the amount of credit that they give out to people, and particularly people who are in more risky financial situations.
What percentage of credit card holders go into debt or go into default? Do you know?
Well, in terms of going into sort of that charge-off where, you know, it's pretty clear that you're not going to get any money out of this person, that's about right now about 6 or 7%, somewhere around there. So the amount has increased, and that's why I think there's been a lot of attention to these kinds of programs, because we really are in a time when consumers are realizing that the spending boom that they enjoyed in the earlier part of this decade is really coming to an end, and now they're sort of facing all the bills and facing the amounts of debt that they've accumulated over the past several years and realizing, I can't pay it all.
And so that charge-off, as you called it, that charge-off percentage has increased during this economic time during the last couple of years?
Definitely. That has been one major reason that the credit card companies are saying that they have lost a lot of money. It's one major reason also why the amount of credit that America has outstanding has fallen by something like $100 billion over the last year.
Next call for Elon Moy comes from Fort Myers, Florida. Go ahead, Carl.
Yes, I've been on a debt management program for a few months now, and I'm very happy with it. The one I'm with is with part of the United Way, and they didn't reduce my balances, but what they did was they took a lot of my interest. It went from like 20-30% down to like 1% and zero. So I'm saving a lot of interest, and I'm very happy with it.
Are you making progress on your debt?
Oh, yes, yes. I make one payment a month. I've closed. I have no more credit cards. I've closed. You have to close all your credit cards, and I make one payment to them. They charge me a $30 a month fee.
Now, when you say United Way, are you dealing with a nonprofit, or are you dealing with an actual for-profit company?
I believe it's probably nonprofit because they're part of United Way, the company that I deal with.
And so they charge you $30 a month, correct? United Way does?
Yes.
Okay. And have you seen...
And when I went to them, they had an interview, and they said everything out, what it was going to cost me, what the fees were, and everything.
All right.
And what they do is they negotiate with each credit company and set up a payment program with them where they have less interest.
Elon Moy.
Great. Well, I'm so glad that he's making progress on his debt. That's fantastic to hear. But the important thing that he said was that he was able to work with a nonprofit to negotiate down his interest rate. That is a different type of business, and that business is typically called debt management or credit counseling. What the debt settlement companies do is actually reduce the amount that's owed. So it's a very fine line and kind of difficult to understand, but they really are two very different animals.
Is it different than, you've seen the commercials, you know, if you're having trouble with the IRS, call us because we'll get your debt cut down to zero.
Yeah.
Is that a different animal as well?
It's hard to tell because the commercials, I feel, are purposely ambiguous, so you're not really clear on what exactly they're offering. So, you know, without calling, it's hard to say, but frequently, both debt settlement companies and credit counseling companies and debt management companies, everyone in this arena does advertise over the radio, on TV, etc.
What, if you go into a debt settlement company, how does that affect your credit rating?
Well, they would say that industry would say that it could actually help your credit rating, because if you actually pay off your debts, then you're going to be in better shape than you were before. But one concern that has come up is that during this process, some debt settlement companies have instructed their customers not to pay their creditors during this process, to wait, save up enough money, and just make a one-time payment and say this is all you're going to get. So that's also caused some controversy as well, because anytime you stop paying your bills, that can hurt your credit score.
Next call comes from Houston. Kenneth, go ahead. Hey, Kenneth, you know the rules. You got to turn down the volume on your TV. We're going to move on to San Francisco. Kim, San Francisco, go ahead.
Yes, good morning, and thank you for this program. I am one of the few people who've actually made it through the mortgage modification process, and I've also been in a debt resolution process with Everest Debt Solutions since November of 2008, and I put about $94,000 worth of unsecured debt into that program. And as of right now, I've paid down to about $48,000.
That's great. Congratulations.
And I've been very pleased with them. Their payment, yeah, it was expensive. Obviously, I owed the money. Obviously, I wanted to make it right. Obviously, I wanted to try to do it without bankruptcy. Still, still wondering about that, because, some of the bottom feeder lawyer companies get a hold of some of the lower, some of the fruit that nobody will negotiate on, and then they start suing you, and that's where I start running into the problem. Is I'm not equipped to deal with that kind of venue. I'm not a lawyer. I don't know how to go in and be pro per and represent myself. So that's presented a bit of a challenge. But I've been very happy with the Everest Debt Solutions. They've really, really helped me reduce this load about by half.
Now, Kim, when you say it's unsecured debt, was that mostly credit card debt?
Yeah, I had I have a successful company that I've been doing for 30 years, but there was a local leather goods company, manufactured beautiful American-made products. The sewers were Native American, it was all American, and I realized as I was financing it myself with my house and they were throwing money at me. I mean, I believed in green grass and high tides forever. I thought we were doing all a great thing. And Americans, sorry, you just don't want to buy American, even if it is reasonably priced. You don't want quality, you want cheap stuff from overseas, fine, you got it. And so I had to let it go and try to save myself.
Now, did you consider bankruptcy, and how has being in this program affected your credit rating?
Well, let's say my 780's long gone. But at the same time, so is everybody else's. I mean, there's going to have to be some huge reset for credit scores anyway, because I'm sorry, I'm so not alone. They're going to have to figure out how to solve this on a bigger scale than they're thinking too small. I mean, it's a big problem. I am so not alone.
Thanks for calling in and sharing your experience.
I think that what this caller's situation really demonstrates is that the bigger question in the debate over debt settlement, debate over payday lenders, check cashers, any of these sort of alternative financial firms is a question of access. Many people look at these companies and say, should they even exist? Why do these people have all of this debt, et cetera, et cetera? But, some folks are in a really tough situation. And what are the services that are going to be available to them to help them in their position? And what the debt settlement companies would say is that they are along a continuum of services for people who are in tough spots. And if the companies go away, who's going to help them?
Well, the new FTC rules that are in place for debt settlement companies include they must disclose how long it will take to see some results, how much it will cost consumers, potential negative effects of using debt relief services, and key information about accounts must be disclosed. Linda Sherry is with the Consumer Action Group. Linda Sherry, are you supportive of these new rules, and do they go far enough in your view?
Yes, I am extremely supportive of these new FTC rules on debt relief, and my organization has been working in concert with some other consumer groups for many years to try to get rules such as this passed to protect consumers.
And when it comes to advance fees, are you opposed to those?
Yes, advance fees are a system in which the companies take their money up front. And, based on information from industry associations, from the industry itself, nearly 2/3 of enrolled consumers who had paid in advance, dropped out of the programs within the first 3 years, and didn't even see any benefits from the program. So if the industry's own, figures are showing this kind of thing, we feel like this is a program that does not help family finances, it erodes family finances.
Elan Moy with the Washington Post is on the set here with me. Elan Moy?
Linda, I would say, what would you suggest for consumers who find themselves in this tough spot, and what would you suggest them to do if the debt settlement avenue is not available to them?
Well, Elan, I would say that the debt settlement avenue has not even been available to them before the FTC passed these rules, because it has been a sham and does not really help that many consumers. So what we've told consumers all along is that nonprofit credit counseling agencies have tools to help them handle their family finances. For instance, they can go into one of these credit counseling agencies, nonprofit, I will reiterate, and they will find that they have budgeting services, so they can take a look at their overall financial picture and see what is really happening here and what next steps. If necessary, they can then enter a debt management plan with these agencies. And the fees are very low and usually on a sliding scale according to income, so they will not divert important family income in trying to solve their debt problems.
Are you satisfied with how the FTC, Linda Sherry, has pursued settlements against debt settlement companies and pursued action, or would you like to see it stronger?
I think the FTC has done a great job. It's been very aggressive in going after some of these companies. I think they really understand that many of these companies are really skirting a very fine line between hurting folks and, certainly not helping them as the industry claims. There are clear aspects to the FTC mission here in that they are, often use deceptive advertising. And I think that the FTC recognizes this and has targeted this industry justifiably so.
Linda Sherry is with the Consumer Action Consumer Group. Thank you for spending a few minutes with us. Tom in Annapolis, Independent. Hi.
Morning. Thank you for taking my call. Wonderful program, great information. A quick situation about me. I started with maybe $30,000 or more in debt 2 years ago. I tried debt management. It didn't seem to work. I tried credit counseling. My monthly balance would have gone up, cash flow out of pocket. I eventually settled with every one of my creditors to shut down the accounts, drastically reduce my interest rates, and I've been plodding along. But I still am in a position where I may have to deal with this called payoff. And one thing you haven't mentioned, and then I actually have an idea for a compromise here, but one thing you haven't mentioned is the fact that when you take a debt settlement reduction, either through one of these companies or negotiate it on your own, that benefit, that reduction in your debt, is counted on your taxes. So then you have to pay tax on that, which further affects your out-of-pocket after the whole thing is said and done. And I've had friends do this, and they didn't realize that up front. But what about as putting this money in escrow when you make your monthly payments instead of, you have to stop. And by the way, every time I did this with an institution, they told me I wouldn't be eligible for the program until I was delinquent. So that's kind of common. But why not put that in an escrow so that the company doesn't get it as an upfront fee, but yet it's still there for the consumer to pay down when it's time? What about that?
That you had a lot of information there in the question. One thing I want to address first is the tax issue, and that is something that has been talked about. There has been, I think, some folks talking about potential legislation around whether or not you'd have to pay taxes on any amount of debts that you don't pay. That's an open question. The other thing that he mentioned is this idea of an escrow account. And actually, when you work with a debt settlement firm, they require you typically to set up an escrow account under which you deposit money where you save up to pay off your creditors. One of the concerns about these escrow accounts, these third-party accounts, is that typically the debt settlement firm may have access to that account and may be able to take out their fees from the amount of money that you're putting in there before you are able to save up enough money to pay off your creditors. So the third-party account has been something that has caused many consumer advocates restless night's sleep.
New York City, go ahead.
Hello?
You're on the air, New York City. Go ahead.
Yeah, this question for Ms. Maya.
Moy?
Yeah, in your field, do you deal with, like I seen at the ad you guys put up was Freedom Debt Corp. there's also a Freedom Tax Relief Corp. Does that Tax Relief Corp fall under the same like settlement that the settlement company that the tax relief company fall under? They all fall under the same regulation?
Well, it's hard to say without knowing exactly what Freedom Tax Relief Corp is, but if they are promising to reduce a consumer's debt and reduce the amount of money that they owe, they could very easily fall under this same program as well.
Next call for Elon Moy, talking about debt settlement companies and new FTC rules that they are facing, comes from Colorado. Go ahead, Greg.
Yes, hello.
Hi.
Hi. I just would like to say that I'm glad I was able to get through. I just got through working with a debt settlement company. And
what was your experience?
Well, one of the things that I wanted to mention was, I guess when you're dealing with several debt companies or credit card companies, that I think they're all on their own separate schedule in terms of how they're managing your credit card debt. And I've noticed that some of the companies are starting to send out settlement offers, for which I received like 4 or 5 settlement offers in the mail, which kind of was one of the reasons why I got into the debt settlement program.
Did you respond to the debt settlement offers? I mean, did you say, yes, I'll take this? Or did you say no?
Well, I was under the impression that was kind of something that these debt settlement companies would do.
And so what's been your experience now that you've been working with the debt settlement companies? You received offers from your credit card companies. You went to the debt settlement companies. What's been your experience?
Well, the specific company that I worked with, the way that they were set up was, as long as you get money in their account, that they can't actually settle until you've reached a certain amount of money in your account before they actually call up the credit card companies.
Yes, again, this is very standard. This is that third-party escrow account that we were talking about previously. And the way that works is, again, there's a separate account that's set up, and what the debt settlement companies say is, hey, you need to save up X amount of money before we can even go to your creditors with some kind of reasonable offer. The question is, how difficult is it for consumers to save up that extra amount of money, and how much of that money is going to go toward fees, and how much is, at the end of the day, going to go to the credit card company? The other concern with that is while you're saving up the money, another caller mentioned this as well, frequently credit card companies will not agree to negotiate with you if you've paid your bills on time. What incentive do they have? So there is some strange disincentive to actually not pay your bills, which is something that can get you into trouble down the line. But again, a lot of times they're not willing to help you unless you are in trouble. So there's a chicken and egg there.
Have the credit card companies ever publicly spoken about the debt settlement companies? Have they said anything pro or anti about these companies?
Not that I'm aware of. However, the credit card companies will say that they work with their customers on an individual basis to at times work out debts and work out payments. So that, again, that avenue is available to you if you have the financial sort of literacy to negotiate with them.
Next call for Elon Moy comes from Tampa. Mary, Republican.
Hi, Elon. I'd like to hear your comment on my situation, if you could, please. I'm unemployed, and I have not been able to find a job to do a debt settlement. I've been offered many settlements, but they want big payments within 2 months. And not having a job, I'm actually in foreclosure. Wednesday, I applied for a temporary job, and they were going to hire me through the holidays, minimum wage, Friday, Saturday, and Sunday, 4 hours each day, 12 hours a week, so it'd be about $120 a week. And then they called me yesterday, and they weren't able to hire me because my credit is bad. This is the 8th time I've been denied a job that the employer was willing to give me a job. And they told me, no, they can't hire me because my credit's bad. And I've tried to contact my legislatures here in the state of Florida, and nobody seems to listen to me or want to help. I don't know what to do.
Well, she is in luck that there is some legislation that's out there, and I believe has passed. This is not an area that I'm as up on, but there has been legislation out there about this very issue, about how are credit reports impacting people's ability to get jobs and whether or not employers are considering that during the hiring process. Clearly this woman feels that that has impacted her ability to get a job, but that's something that Congress has looked at and something that, if it hasn't passed yet, I'm sure we'll hear more about in the future.
Virginia Beach, Curtis, Democrat.
Hello. I wanted to know about your local banks or credit unions and if they have counseling, credit counseling, and if a bank that you hold a card with, is it a conflict for them to counsel you on your credit debt when they hold a credit card?
Yeah, I would tell you that it is important to call up your creditor when you start to get in trouble. That would be my very first step. I'm obviously not a financial advisor, but I would say that that's the first thing that you should do is to call up your credit card company or call up your bank and say, I'm having a problem. What can we do? And that's where I would start before I go down some of the other roads.
Have a lot of these debt settlement companies popped up or been formed in the last 2 years because of the economic crisis that we're having? If about 1,000 companies are in this business, have a lot just come online?
Yeah, actually, the Association of Settlement Companies, who we spoke with earlier, when they were formed, I think it was about 2003, there were only about 300 companies in the space. That has increased to 1,000 companies now, so you can see there's been a lot of growth in recent years. Really, the business began to increase after changes to the bankruptcy law made it difficult for more difficult for people to go into bankruptcy, and then the financial crisis sort of added on to that as well.
Where are some of these debt settlement companies based?
Well, we have two very large debt settlement companies actually based in the Washington area. There are two that are based in Maryland that I know of that provide services to many people, but they really are all over the country.
And they are basically, essentially, private financiers who start a company?
Yep, that's exactly it. They may have been offering some other type of financial service previously, maybe offering credit counseling, maybe offering some of these other plans that we were talking about along that continuum, and then added debt settlement to their array of services, more recently.
St. Petersburg, Jeff, Republican. Hi.
Good morning.
Good morning.
I guess I'd like to find out a little more information or advice for us to give our young people, and especially young family members that have all of a sudden found themselves in debt. And you kind of want to go with the ethical way. You have to pay your debt off. At the same time, it seems like the banks had a lot of predatory lending practices towards the young people. So you try to get them to pay it off, or are they eventually going to fall so far behind with the interest that they're kind of stuck between a rock and a hard place?
Yeah, that's a very good question. And actually, there have been a number of protections around all types of lending that Congress has enacted in the past 2 years. So one of them that has specifically targeted young people is around student credit cards. That was passed as part of the Credit Card Act. That limited the marketing that credit card companies could do on college campuses, limited sort of the way that colleges and credit card companies could interact, forcing colleges to release any contracts they might have with credit card companies. So there are things that are happening on a national scale to help protect some of the most vulnerable consumers out there.
Ilan Moy is with the Washington Post, and she's been with us talking about debt settlement companies and some of the FTC's new rules regarding such companies. Thank you, and please come back.
Thank you.